Before we get into it, if you enjoyed these videos, please hit the like and subscribe button, and keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as, investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. All right, folks, here we are on Thursday, March 20th. We're going to take a look at Hood today. So we haven't checked in on old Hood for a while. It's still working through the levels that we've had on the chart for it's got to be months at this point. I can't remember the last time that we looked at Hood, but it is getting close to the upper level that we have at the moment of 45.91. I do feel like it's been respecting these levels really well all along. If you take it intraday, you can see it moving very clearly. Intraday activity off of these levels, even pre-market activity off of these levels. And so, yeah, I'm pretty happy with how those have held up. Now, can it get to this 45.91 level? That's the next question. Will this ultimately end up looking like just a bear flag? Or will this look like basically a V-shaped recovery, right? If it really recovers, that's pretty V-shaped. But, you know, the levels it has to move through for the time being, 43.95, it's going to have to overcome that, and then 45.91, and then we can add some additional levels to the upside if it gets there. If it does pull back, we have 41.70 here, 40.31, and so on and so forth, you see. Now, what's actually more interesting to me than the levels, although I do feel like they've held up really well, is the situation with the EMAs at the moment. This is a pretty strong indicator that this may not just be a bear flag, that there might be a chance for something more V-shaped here, or even just sort of, it doesn't have to be V-shaped, but you know, it could come up, consolidate, make another move, consolidate, make another move, sort of like you see here, move, consolidate, move. And the interesting thing to me is that it came up off of this 183 basically on the dot. I mean, this hit right here on this day, maybe that wick came through it a little bit, but it looks like it just came right to it to me. And the motion off of that has been pretty solid. Now, the question that I would have if it doesn't have this recovery is when it comes down for support again, right? To me, I would consider this like one swing of support. I could see if you're sort of counting the candles, you could maybe say that there's like 3 candles of support here. But if it did come down again and retest this 183, I would wonder, do the buyers show up there again? And at this point, it will be slightly higher than it was back here when it picked up support. So, you know, it's the thing that I warn about a lot, which is like going to the well too many times, right? Just because a buy zone has held up really well previously, at some point, all the people that were interested in buying at that level have bought. So at some point it comes down there again. It's in what used to be a buy zone, and it's just sort of like, hey, the buyers aren't here anymore because they've already bought. So what's the next buy level, right? And then it just continues downward until it finds the next area where significant buyers step in. So that's sort of the two things. One, if it comes down, what does the motion look like off of the 183 again? But if it does continue on, right now it's catching resistance at the 21. Again, to me, if I'm looking for it to throw some recovery patterns here, I feel good about this. It didn't press right off of the 8, right? That would have been a disaster if it came up and just caught resistance off of this white 8 EMA and came down again. That's pretty rough, and that might have shown that the 183 gives way. But it coming up and pressing the 21 today, you know, I would feel generally pretty good about that. It's squeezing this 8 EMA toward the 21, giving a potential for a bullish crossover there, and the 34 is not that far away. So it does have a little bit of like a tight space of resistance here between the 21 and the 34. The 21 at the moment is at 44.19 and the 34 is at 45.47. So we have like $1.50 or so in there of, yeah, kind of sticky resistance. But if it can get through it, you know, there might be plenty of room. Well, there's certainly plenty of room to run. So I don't want to paint too rosy of a picture here. I think the other thing that I would very much caution on, is to just keep in mind, it doesn't have anything particularly to do with Hood, but the macro sense of things, right? The overall markets where especially QQQ or the NASDAQ are going, to me, that's going to most impact a stock like Robinhood. But then, yeah, certainly, of course, like the S&P and whatnot. But if that just continues to be really, really jittery, right? This is not a great look. This is exactly the thing I just said you don't want to happen, where it caught support on the 183 and came up and caught resistance right at the 8. Right? It had no chance of making a motion toward the 21 like you see here. So if things continue to be really drippy in the overall market, I would just say it's probably going to be really hard, if not just outright impossible, for Robinhood to hold on its own laurels and its own chart setup and go against the grain of the market, right? It's going to get punished probably if that happens. So I would strongly caution against that. I have been saying maybe I'll eat these words, but I do still feel like we have not seen the bottom of this SPY or QQQ at the moment, right? SPY catching resistance right at the 183, no ability to put a full candle body on it, just wicking right off of it at the moment. To its maybe one slight positive I could maybe see on this is doing it in the opposite way, right? I said if you come to the well too many times, at one point maybe the buyers aren't there anymore. Well, of all the people who've been wanting to sell in recent days at the 183, it keeps getting back there, right? It's really trying to stick to that 183. So at what point are the sellers no longer there, right? The folks who've been trying to offload at that level have done so. And when does it reach up again and just go, oh, folks aren't selling here anymore. Okay, we'll mosey right on through. That would be the flip side of what we're talking about with Robinhood. But I don't want to get too far off track here. Probably already am. But I just want to caution on that. In any other normal environment, I would feel really good about this motion. And maybe it ends up to be that way. But if the overall market falls apart, continues to be very jittery, whatever, it's going to be a tough go. So the likelihood of Robinhood making it through on the chart is slim to none. We are going to have earnings coming up pretty soon. Oh no, sorry, I was thinking that it was May already. So we're a couple months away from more earnings coming up. So nothing like that sort of influencing things at the moment. I would suspect in terms of catalyst wise is the reason I bring that up. Now in the Thinkorswim look, it's making its way through this red wave cloud and just keeps pressing. And it's catching resistance right at the mid-range of the channel, right where you would expect it to. So nothing unexpected. It's not bad to catch resistance. Doesn't mean that you can't recover. It's just where is it catching resistance, right? Again, better to catch that resistance on the 21 than on the 8. And what does it do when it hits that resistance? Does it really retreat? Does it really just get pummeled? Or does it kind of show some stickiness? Can it show some motion through it? That's what we will sort of come to see in the next week of trading or so, if it just gets pummeled off of this or if it's able to come through. Now if it works back through any of these levels, even if it came back up to the put trigger for March and caught resistance there, that's at 48.21. That's this level here. That might be something to look at. If things get really juiced and spicy and it comes into April full of gas, the call triggers at 45.74. The +1 ATR would bring it to 52.49. If it wanted to make that full move, we'll see. Nothing triggering yet on the TTM squeeze indicator. So without a trigger and a fire happening, and again, like I said, we are, now that I did the math correctly, and I realize that we're not in the month of May, we're far away from potentially a known catalyst, right? They could, of course, come out with some surprising news or analyst stuff or partner, whatever. Stuff could come out that's catalyst. driving, but the known one is earnings, and that's a ways off. So without anything triggering on the TTM squeeze indicator, we might just see some counter motion from this recent pullback. But it was a really good call out back here when it triggered, fired, and it just, it lit the rocket ship. You could have bought that first fire candle at about 41, 42, and in a pretty swift period of time, you could have rode that all the way up into the mid 60s, which would have been a nice return in a pretty brief period. But yeah, I would tend to look at this chart and feel relatively hopeful, but for the fact that I worry that there's still strong market pullback in a macro sense that awaits us. Maybe I'm wrong with that. We will see. All right, folks. So I hope that you've had a good trading week. And as always, I appreciate you watching, and I will see you in the next video.